Hello, this is the recap of the yesterday's Bund session. So if you watched it yesterday, the 6th of November, and let's have a look onto the market behavior of the previous day first. So Bund on Tuesday showed OTF bears as the price dropped to the last month low. That means we closed at the low, and you see this here, closing here at the low and finish distribution at the downside with this, like here you can see in this time period we had a quite strong rejection, a buying tail here. So the initiative was stopped by the responsive buyers here from OTF side. You also see it here in the delta. It was about 3,500 contracts to the downside and was totally rejected within a 15 minutes period, again to a bullish delta. So far that means we do have, at this moment at least, some signs of responsive OTF appearance. When we look to the bigger picture, we see that we're also here at the low of the last month, so around the 170.30 area. We're at the unfair lows. So we need to understand then that this today here at the 6th of November, the Wednesday, that we have some interesting levels here and need to watch this carefully. If this becomes either a continuation of the long-term bearish trend, or if we get some signs of rejection or just getting back here into the yesterday range and then yesterday PUC. Meaning we have a very good risk reward for both directions. The overnight session then stayed bearish. The pre-market first rejected the strong low, and you can see this here. First it tested this low, it went through even with the pre-market, so this was not the best sign at the moment because we have less volume than in the normal cash hours, but even see that we could get a 3 ticks lower than at the yesterday daytime session. So that means, all right, they have some rejection yet, but they got 3 ticks lower. So that means there is some power involved, means they cannot, we do not see the same responsive power from the OTF buyer so far. Anyway, reversal long level stays alive. If the cash market tests this level and got clear rejected at this area, you can look for the strong responsive buying and then for the long entry with the best risk reward from the big picture. The hypo 2 was the play short, strong selling initiative towards the 30 area. Targets would be around the 16. So this is this area here. When we hit this area with strong initiative and don't get rejected, you look here for the continuation outside of yesterday's value, of course, and even outside of yesterday's range, which gives us the greatest opportunities from the directional conviction so far. 15 area would be some LDN in the super long-term picture. So take care if we see rejection signs here, and take your profits. If there was some strong rejection at the low, so hypo 3, and we see initiative buying cames also, and don't quit at the 170.46 area, it is possible that we even get to the 52, 55 and higher. So that means if we see the rejection, or if we find no continuation on the downside and getting back into yesterday's value, interesting would be to see if the strong initiative of buying continues here at the 52 level, 46, 52, to get even here above into this higher distribution. All right. So then see how the day played out. We have this phase from the morning. You see the rejection of this area 30 wasn't not so, let's say, impressive by the OTF buy side. And when I enlarge this picture, we do see that then before they open in this phase, that there is some sell activity already here in the books. And you can see it is pre-market, it's 8 o'clock, 34. And we already do have almost 1,000 contracts here sold into this area. Getting even through and no harsh rejection. That means obvious, this is not the signs you want to see when you're looking for a clear buyer, a rejection of the sellers. We see this, or we saw this here after the open, after the 8 o'clock pre-market open, so about 8 o'clock 4. In this example, you can see clearly the rejection of the OTF buyer. But as the price then ranged within this fair distributed value, we see here the normal distribution bell curve, we don't see this continuing. That means the sell pressure didn't stop, and on the other side, the OTF buy side rejection did stop. So this is an obvious sign of weakness from this side. That doesn't mean that the stronger, from volume perspective, cash market agrees to this situation. So we have to wait anyway. What we then see is here at the open phase, immediately some people are started to buy here and got rejected at this pre-market VPOC. At the moment when they reach this level, you see immediate rejection from the sellers. So that means we get into a situation that is more looking as having a higher probability for a open drive. If the at the moment POC finds now people shifting and putting value to the downside. And this was happening. Actually, here at 9 o'clock and 3, we see big initiative coming and is trading away from the at the moment value. And they put about 600 pieces more net liquidity selling into this area. And this was also, again, the 170-30 level. So if you were looking now for my trade initiative momentum hypo 2, this was the moment where you have to think of getting into this trade with a tight stop above this area. This was the open drive situation. We didn't know yet how they handled the situation with the provided liquidity here in the bid around the 2022 area. But so far, everybody could see clear there is a lot of drive and initiative going away and trying to get lower, find value outside of yesterday's value. All right, strength, we are below the range. Understand, now they hit the value, hit the liquidity in the bid. At this moment, one would have been like 5, 6, 7, 8 ticks in plus. And you see that they first take out the liquidity, but what you cannot see so clear here, this is why I will hide the study, the day study, so you can see better the liquidity. Wait a second, where is my daytime study here? All right. So you can see here that they provide liquidity not only here at the level 23, but also here at the 22. And when you look closely, you can see there was still liquidity left at this level. That means they traded into this area, they eat the liquidity, it was real liquidity at the 23 level, but the bid was strong and refilled here at the 22 and also provided protection here at the 20. Two things now could have, you could see two things here obviously. First, Delta shows us that the initiative of sellers after hitting this area stopped. That means the initiative of the sell side was not that big, it could handle an outside range imbalance to get lower. That means this was just mediocre OTF appearance. At this moment, you just have to think of, we are outside of yesterday value, we're outside of yesterday range, right? 170.30 was the low of the day. Or it was also near the monthly low, the last month low. But you see, they stopping here. You can stay in this position like here and here and here. You see another attempt to continue. You can even now stay in this position. Of course, it's always smart, you know, in Bund, in between 5 to 10 ticks, this is the highest probability for your first contract or your first position, yeah, to secure your first win. You would reach this, all right? But if you have opened still a second position, you can now stay in the book, of course. This can stay in the book. You know here what the buy initiative starting, here and here. And when you see this pulling back, you can even still stay in the second position. You secured your first position, 5 to 10 ticks. It's always realistic, most realistic targets in Bund. But for your second position, you made with the first position some money. And now with the second, you're paid and can wait. If it's coming, and it was coming here, a second try in a bigger picture, let's say here to the downside, if there is enough initiative still from the sellers. Maybe the situation changed now. Maybe they just needed more pieces as people taking their losses. It's their wins. It's good for passive OTF selling, because if people closing shorts, they need to buy, and this buying can be, let's say, collected by the OTF seller. So this could have happened. So always give it a chance, because market, when you trade a second position for the longer target, it's not realistic always that you get it with the first swing and down in 6 minutes and boom, 40 ticks. No, you need to stay and understand, as long as the overall scenario is alive, means as long, here the moments where the initiative of selling, right? As long as this area here stays alive, means staying below, okay, staying here below, building an agreement, a range, building value, and don't show the signs of an excess on the downside. As long as this is happening, everything is fine, and you can handle your position and control your risk. Just having your stop above, knowing if you got stopped out, so what? You made your profit with the first contracts, let's say 5 ticks. You maybe lose it with the second, so 0. But if you trade it this way and you're managing your risk and you only get 2 or 3 out of 10 situations a super long trend, then get into the trend, get into the areas where you wanted to get to, then you have 15, 20, 25 ticks with one trade. And don't risk very much. All right. But what we see now is this failed. Still some initiative in selling coming here with the so-called re-short. All right. OTF staying in control, bears in control. Now, again, we're pulling back. Now you see the initiative on the buy side even started to grow. When we're reaching the range high again, you see initiative of the buy side doesn't stop. But it was, when you look here, it was rejected by the OTF seller. That means the seller was standing here. You see these rectangles. This can also be some, let's say, preparation for somebody who already reflects the numbers that were coming. They were better. Numbers were better. Good for DAX, bad for Bund so far. So that means maybe somebody knew more than the rest and they collected already passive the buy pieces. So that means people got too long. And if you get too long and seeing you get absorbed, you need to get out of these pieces. That started here, and the news boom catalyst even helps to get lower. And now something changed a little bit in the picture. First, what you could see is already here, see this green rectangle, people started already here to collect again now on the buy side. That means people who getting short are already protected now here. The buyer steps up, obviously. This happens again here. You can see it barely, but there was also a real green rectangle. And you see the people reacted onto. This is reflexivity. This is reflexive. People see somebody provides. People know this is not good. If there is not enough sell power, people react onto, and price got higher. And this behavior can also be seen of the other traders that want, of course, people get trapped now into the shorts. This is reflexivity. And what we see now is the lows getting higher. The initiative on the sell side is weakened. You see in delta the divergence. And people now started, as they got up, there were again some numbers, 9:55, also 10 o'clock. And after 10 o'clock numbers for this moment was over, I think, till 11 o'clock. And now you see that this was just the numbers that kept us, the bearish scenario from there on, alive. But then the scenario changed. More and more the lows couldn't be reached anymore. This was the 30 area, so that means yesterday low. And that means so far we are now back into yesterday's range. And people pushing it now and tried to give it advantage now. And you see they take out here this area of the bearish until yet bearish protection of this scenario. That means the picture from now on, it's 10 o'clock to changes. Expecting now, if this is a sign of more strength for bull side, okay? We didn't see the harsh rejection. This would be the nicer play. Going down, boom, rejected, and you play the reversal. No, we saw an attempt of an open drive. It was about to fail with this scenario already here. You could secure your first contract. You could secure now your second or get stopped out, making no profits here, but maybe a little loss. And understand, all right, the old hypo, the initial hypo, reversal long, could not be played as the reversal with strong responsive buying, rejection of seller, all right? But if you know now option theory and reading market profile, you now can see that even if we were outside of yesterday range, of course, even outside yesterday value and even outside of yesterday range with the biggest directional probabilities, it failed. And now you need to see if prices can stay overall, again, would say 70-80% of the whole development, again within yesterday range, so above the 30. That means building acceptance. And we do have now, that's what it's called, having an acceptance, because at this moment when we started from 10 and now it's 11 o'clock here, we did build 2 TPO. All right? 2 time period means acceptance. 2 time periods for the orientation just. Yeah, if you work with market profile and auction theory and understand, but you also see it here that prices don't get below. And you see it in the order flow. The delta is overall bullish. Cannot lift, cannot get above this area, cannot really re-enter the yesterday main value yet. But acceptance again within. This is the sign which you have to understand. There was a huge probability to the downside, all right? The open drive failed, all right? The third attempt here on the downside was stopped already by buyers coming in. And number 4, we are now taken out with a lot of boom, explosive, the rejection area, the sellish, the bullish, the bearish control area, all right, from the initiative, and now staying within yesterday range. What you have to expect now is not a trend day here anymore, not a trend day here to the downside anymore. It is more likely in context that we now see at this moment, understand, building here acceptance within, that this will be the extreme, or has a good probability that this here is the extreme on the downside of the developing day. That means now you have to think if there's even a sign of excess on the downside maybe coming, gives you an entry opportunity. Or if we see that they protect here, like we see here, starting here, the low more and more and more, and you will find a passive entry already here when they're hitting this area without an excess. You can also play it with a short stop. This is up to you. But what we see then was they already tried here to protect on the downside, and then see what is happening. Also all the time we stay within, and now boom, excess. And when you see this here, boom, a quick rejection, follow up by immediate strength of buying. This is the textbook rejection. That means we got some volume down here, 600, 700 contracts starting here, another 400 almost here, and then boom, 1,000 on the other side. This is in context where you look to position yourself on the long side. And understand that doesn't mean that you're now going immediately up here, but you know, excess, in context, acceptance, yesterday value, yesterday POC 52. Now you have the highest probability that at least this area is tested again from yesterday. And take some time, but no risk anymore. For a first contract, you're reaching a 10 tick already here, the high with this entry here, all right, or here. And for the second position, we're reaching also the PSC, even reaching the value area high from the bigger distribution. That means when you look here at my hypo 3, which was played not with the strong rejection, but just with the ongoing reacceptance of yesterday. So this is not what I have prepared, but overall in context it is the same. You're looking for initiative buyouts towards the 46 to get to 52, 55, and 46 was definitely the moment here, even before they came here. You see how strong here, the biggest buy initiative, do you agree? The biggest buy initiative so far after the picture has changed since the excess, big excess, all right? And then one of the biggest buy initiative, okay, there was one at 12.20, yeah, but so far one of the biggest buy initiative, again, getting to the volume edge again here into this 40-46 area. And starting also the protection. See, when the protection starts to get biggest of all time so far, here was also here at this moment about 1:30. So overall, this was the moment, and we hit then the 52, we hit the 56. They even were looking with no more power, losing power, but strength in the buy side. And at the end of the day, they even hit and tested the area of the 50% weak. That means the overnight high area. No, sorry, this is not the overnight high. This was the today's night overnight high then. But when you look now at this finished picture of yesterday, of the 6th of November now, you can see at this moment one needed to recognize the picture here is changing. One got the excess here and the possibility to re-enter as prices wanted to go back into yesterday's range. And this was the most, let's say, cheapest entry in context understanding for the long. So of course, even for the intraday swing trader, especially for the intraday swing trader, a failed open drive, reacceptance into yesterday range, excess marked the ability of bulls are in control, and then that's it. So thanks for watching. Also helpful for Manaba. Bye bye.